This is Nashimar, the CEO of InfoTaxPower.com, and we are a team of CPAs and EAs. If the taxpayer is not actively involved, passive losses can only be deducted up to $25,000. This is my today's program. In this program, we are going to discuss what is the active and passive income, and what is the active participation in real estate, what is the non-active participation in real estate, and I'm going to present or exhibit an example to uh, for your better comprehension about the passive and non-passive participation and non-participation activities. If the taxpayer is not actively involved, passive losses can be deducted up to $25,000. Again, and we will also learn about the reasons why passive losses cannot be fully used in the year they are incurred rather than the subsequent year. What is active participation in real estate? Rental activities that are passive are allowed by the IRS, Internal Revenue Service. Taxpayers who actively engage in their rental real estate activities can take advantage of this exception. And to qualify for this exception, you must actively participate in managing the rental property. This involves making management decisions, including approving new tenants, determining rental terms, and handling repairs. You do not have to do it all by yourself, but it is important to be actively involved. And up to $25,000 of losses from your rental real estate activities can be deducted from your non-passive income if you meet the active participation criteria. And $12,500 is allowed for the merit filing separately. The person is not required to meet to the passive activity loss limitation rule if the following conditions are met. Number one, the taxpayer is required to be actively involved in the activity. In general, this means that they are a part of making management decisions or arranging for others to provide service. Number two, the taxpayer must own a minimum of 10% of the rental property for the entire year. And number three, it is necessary for the modified adjusted gross income MAGI of the taxpayer to be under $150,000. MAGI or modified adjusted gross income benefit is reduced to between $100,000 and $150,000, which I am going to explain it with the example shortly. A taxpayer loss of $25,000 from rental real estate activities that exceed passive activity losses, income can be reduced from portfolio or active income. What are the calculations for phase out? Number one, passive activity losses can be offset against other income up to maximum of $25,000 as a starting point. Number two, this phase out range begins when the individual's modified adjusted gross income exceed $100,000, and the $25,000 offset is reduced by 50 cents for each dollar of modified adjusted gross income which is over $100,000. Can we use the disallowed losses in the subsequent year? When your passive activity losses from rental real estate exceed the allowable deductions for the year, these excess losses are not lost. Rather, they are suspended and carried forward to future years. If you have sufficient passive income or dispose of the property in a fully taxable transaction, you can deduct these carried over losses in subsequent years. Let's calculate the deductible rental loss step by step by the information. We have a modified adjusted gross income is $120,000, and the threshold or the cap is $100,000. So we have an excess income of $20,000. So MAGI was $120,000, whereas the threshold is $100,000. So now we have a $20,000 in excess. So in order to calculate the allowed passive income against non-passive activities, we have to reduce it by 50%. So 50% of $20,000 is $10,000. So in part, the 25,000 is only allowed. So adjusted losses we have to reduce with the 25,000, which is the cap by the IRS, minus the $10,000. So the taxpayer deduct rental losses is limited to $15,000. Let me summarize it. Since the total rental loss for the year is $30,000, only $15,000 of that loss can be deducted due to the phase out rule associated with the taxpayer modified adjusted gross income. If the taxpayer's income exceeds the threshold, then the amount of $20,000 excess will be used. The $25,000 passive loss limitation is reduced by 50% of this excess. I request you subscribe to my channel to receive the most up-to-date and accurate tax information to enhance your knowledge. Thank you and God bless you.